Good morning and welcome to the Killik & Co market update. Markets continue to be heavily influenced by the words of Donald Trump. Earlier this week, there was some concern that he would try and fire the chairman of the Federal Reserve, Jerome Powell, which caused a sell-off in markets, although they did recover later in the week when he put out a statement saying he did not intend to fire him. Here's the S&P 500 for this year to date. In the pink box, you can see this week's decline and subsequent recovery. Jerome Powell is generally viewed positively by investors. He's calm and he's sensible. He's really the sort of person who should be running a central bank and making key decisions on interest rates. Some of Trump's recent comments have implied he wants to stop the Federal Reserve from being independent, which was very disconcerting for markets. Here's a post that appeared on Trump's Truth Social account. He called Powell too late and wrong. He said the bank should certainly lower interest rates now, and he said Powell's termination cannot come soon enough. He later referred to Powell as a major loser in another post. The threat of the Federal Reserve losing its independence caused a further sell-off in the dollar. Here it is against the pound over the last 12 months. There has been a notable further decline this week, and the dollar is now down 9% against the pound since January. And the scale of this currency move has had a big impact on portfolio values. We also saw a further move into gold this week. The metal briefly went over $3,500 per ounce for the first time before falling back when it was confirmed that Jerome Powell would remain in place. While Trump's comments earlier in the week were concerning, it was reassuring to see that he does appear to be mindful of how markets are moving, and he does appear willing to take steps to prevent them from falling further. For example, he did announce that 90-day pause in tariffs, and earlier this week he did put out the statement saying he would not be firing Jerome Powell. We're now well into quarterly reporting season, and 23% of the constituents of the S&P 500 have reported results this week. One notable takeaway from earnings season so far has been the number of CEOs mentioning tariffs. Apparently, over 90% of CEOs mentioned tariffs in their earnings calls. We are starting to see some real-life impacts of the tariffs coming through. For example, delivery company DHL has paused delivery of high-value items into the US because the requirements keep changing and the paperwork has become too complex. Shipping company Hapag-Lloyd said this week that it had experienced a 30% drop in freight on its US to China route. Here's its share price. It has been very much on a downward trend since November. There have been lots of reports this week that trade negotiations are taking place between the US and other countries, so we'll be keeping our eyes out for any agreements that could move the market. And finally this week, Netflix shares hit a record high after the company published a good set of quarterly results. Here's the 5-year chart. The shares did fall last month along with the wider market, but they have now fully recovered from that loss. One thing that pleased investors was the ongoing improvement in the company's gross profit margin. The bigger Netflix gets, the less it has to spend on new content as a percentage of its overall revenue, and this is good news for the margin. Here's how the margin has grown since 2015. It was 32% back then, and it's now over 45%. Despite the share price being at a record high, it's interesting to note that the price-to-earnings ratio has come down during the last 10 years. This is calculated by dividing the share price by the profit, and it's a popular measure of how expensive a share is. On this measure, the shares are much cheaper now than they were in 2015. So do give us a call if you'd like to hear more about our views on Netflix. Looking ahead to next week, earnings season continues, and it's a big week for big tech. We're expecting results out from Microsoft, Meta, Apple, and Amazon. That's it from us. Have a great weekend, and we'll see you next Friday.